Okay, so hello everyone. Hope you are doing great today. Another new session together, guys, to understand the market situations and the market conditions based on the algorithmic levels. Of course, it's a manual, and we will understand how to buy and where to sell and how based on that kind of science. Okay, so I hope you guys understand the meaning of algorithmic levels. It is the only way to make money. There is no other solutions. Okay, so I personally invite you to subscribe to my channel. Okay, just hit the subscribe button and keep watching our videos. Okay, it's free of charge. It's free. There is no ads. There is no say nothing premium, nothing VIP. Okay, just lessons. Okay, just lessons. I wish you guys just have the ability to listen to my videos and have your notebook close to you. You can write down the meaning of each and every important, say, tips and advices. So it's very easy, guys. Just follow me, okay? And you will join the 5% of the elites who makes money and actually they control the markets, not only the cryptocurrencies, but many other, let's say, financial markets. So I hope you guys understand that and support this content, support the science, the scientific content, and give us a chance so we can let people be aware that something actually matters inside the financial markets, and this is the way we should trade. Okay, many of you now use the technical analysis, but I dare you that your positions actually are working. Even if you make money, it's just by chance because you had to gamble with some bullish movements. That you are at risk. Okay, you are at a big risk because if you have a dump later, then all your earnings will be burned. So join us, subscribe to my channel, and if you have time to join the Twitter, it will be great. Our family is still in the inception period, 400 subscribers, and thank you all for this opportunity. And we know, and I am sure that we will have in the near future some extra, say, subscribers, and maybe we can achieve the first goal, which is the first target, which is the 100,000 subscriber. So guys, thank you very much. This is a simple intro. Let's begin with the market conditions and the meaning of the market conditions. So before we can talk about prediction as traders or analysts, especially traders, okay, especially the traders, we must take a look at the monthly chart. Okay, so based on that, we can understand where the market is going with a high probability of making money. Okay, why? Because simply when you set your structure points for the monthly, then you skip to the weekly, then later the daily. After that, you take your positions based on the intraday chart. You will have a big chance of making money. Okay, so your first, say, the probability is 60, okay, 66%. This is your first chance of making money. Then later, okay, using some extra tools, you can add another 10% to 20%, okay, and you trust me, you can have say 80 or 90% of making money. But don't forget, guys, that there is nothing what called 100% in the financial markets. So when you have, for example, let's say 90, okay, percent, okay, of making money, there is a 10% of not making it. So this is when we say, for example, 90% of making money, that doesn't mean that you have a zero here of not making money. This is a 10%. So it's a low probability, but it does exist. Okay, so you should calculate the probabilities And then later you will understand that the market goes this way, because when you trade without, say, some scientific levels and without respecting to the breakouts, and I do invite you to concentrate on the breakouts, you will simply gamble inside the financial market, not trade or, let's say, the invest. So there is a simple rules to increase your probability of making money. Simple rule. It's simple as that. I mean, simple by calculating the market conditions and setting horizontal lines, and you can continue to draw your lines, and based on that you can trade the breakouts only. Okay, so till now everything is clear. Now let's talk about the Ethereum. The Ethereum actually respects the market conditions, you can say, at some high levels. Okay, so that's why Ethereum, especially if you are trading on futures on, let's say, for example, Binance, BitMEX, or any other exchange, you must trade Ethereum. Stay away of all the altcoins. You can use some altcoins during the dump, okay, the dump period, because the dump period can mix you a lot of money if you short. So this is not our subject today. We will focus on the prediction of Ethereum. So guys, like I told you, we have to take a look the last previous closure of the Ethereum or any say cryptocurrency. So based on that, we can have the structure points set it on the chart, then we wait simply the market to react on them. It's simple as that. Okay, this is not the complete rules, but this is the beginning of respecting the rules. So guys, this is the high of the month, which represents a resistance that the market actually smashed over here. And you can say I think many exchanges had Ethereum with the $500, but we can, based on the 491, we can say okay, this is the first resistance. Then let's say the low of the month, which is the 309, okay, 309. Now, after we set this kind of targets here, which means that the algorithms now will use the market conditions as one of the big probabilities of making money. So skip now to the weekly chart. Now you will understand why I had these levels here, the high of the month and the low of the month, simply because it's support and resistance, nothing else. Okay, so you can set manually here. For example, this is the high where we get in this month, and this is the low where we had this month. So you can manually, you don't need to check the candle, for example, or not. No, just simply you can take a look at the chart, and you can see that the market is trading at this level and at this level here. So what next? Here, guys, this is a period of do nothing. I'm not talking about prediction. I don't know where the market is going, okay? And no one knows. Okay, no one does actually when the market is going. So it's a question of probabilities and algorithmic levels. So now, guys, all we have to do is do nothing here, okay? It's a do nothing. Let me just write, okay? Let's do nothing. Okay, period. I think period with the E or without the E, because in French we can add E here. So I don't know. So this is the period of do nothing, guys. Okay, so let's make it more clear. Or we can say, for example, the do nothing phase. Okay, maybe phase even is good. Okay, so do nothing phase. This is actually I think the right sentence. So this is let's say the level where we have just be patient. We should do nothing. Okay. Now, when we say sorry, the do nothing phase, do you understand that do nothing doesn't mean to not trade between the low and the high? Of course, we have another conditions to do. So if you are a weekly trader, okay, a weekly trader, so that your positions can go based on the weekly chart, and you can start trading from 1 week to maybe 6 months until you see some market conditions respected, then you don't have now a chance to buy or to sell, because simply if we will buy, we have to respect this market conditions here. What do I mean by that? If you see any, let's say in this week, if you see any reaction in this at this level here, so simply you need to buy with a stop lower than this level here. So it's up to you guys how many percentages you are ready to risk. Okay, because don't forget, you can see that we'll have high percentage, actually 9% or 10%. Okay, so maybe you can use more than that, but you are risking this particular risk ratio in order to make more than that. I think the triple or the quadruple. Okay, it's more than that. Okay, so you are buying here with a stop of say 10% in order to make 60%. So when the market reacts and we start to make another, let's say the first 25%, we have to change our stops, and we can have now the probability of making money is making the 60% or making the 25% instead of losing 10%. Okay, so it's nothing more than that. It's very simple. Sometimes, most of the time, that the price goes to the upside, and then unfortunately the price drops and hits our first targets. So don't be, let's say, sad because you didn't close at the 60%, because now you in the market you are going to the right way. Okay, you are going to the right way, because nothing is 100% at the market or in the market. So I don't want to talk more about this subjects, because I can see that it's very clear, and it's up to you. So let's talk more about the predictions. Say we can have a do nothing phase here. You can see here, guys, that we have another let's say level here, which represents the moving average at the highs. Okay, and let's check if there is any other movements. So here, so now you can see, guys, that if we buy here and then the markets actually we had a breakout, there is a probability that the markets can retest the 270, okay, or 250, then have another impulsive wave. So now instead of buying Ethereum here and setting our stops here, we will buy 50% or from our quantity or from our capital. Then from the second level, we can buy the next 50% of our balance. Okay, it's very easy. So nothing more than that, because I told you we should follow each and every rule. Many of you say, oh, I set stops, then unfortunately when the market goes, they hit out my stops and then they go back, because simply you didn't check the next charts, because every chart represents majority of traders, millions of dollars. Okay, there is banks now trading the ticks, the seconds and the 5 seconds, with some $1 million algorithms that makes them make money in 30-second minutes. Okay, banks are not, and hedge funds, they don't have time to wait for the moving average 25%. No, but retail traders must do that in order to have big probability and chance to make money. If you will not respect what I'm saying to you, you will get yourself into problems, and probably you will lose all your capital. So guys, this is how we trade. Okay, so this is the levels we are interested in. We should not set our stops based on that. If we buy at the 300, we can reaccumulate from the 250 also this level here, which is the 242. So it doesn't matter, guys, if you see the price hits the levels here, because it's very important that to know that the market sometimes hits some levels, but in maybe 5 minutes, 10 minutes, and it's over. Okay, so hitting for example, the 240, then goes back to 300 in 10 minutes. So you should not be careful saying, oh, if I buy here, there is something happen. No, it doesn't matter. Just make sure if you have 3 levels, buy at the first level, then the second and the third. So I know you can have some obsessions now, telling yourself, what if I have practiced all what you said in this video, then the market goes against me? No. Why? Because you have moving averages, algorithms. Okay, this is algorithm. It's impossible. Okay, it's impossible. Trust me, guys. It's impossible. Just respect these levels here, and if you see any reversal pattern, then buy. So this is the second choice. What about the third? The third, guys, is to skip this level here if you don't see any reversal pattern, because the keys to buy is the reversal pattern. What is the reversal pattern? As simple as that. Hammer candle, bullish engulfing, any let's say, we can say, okay, some slightly bullish candles, it's okay, we can buy from that level. But if nothing happened, never be an early long position when you have a higher pump. And I mean by that, from the inception of this wave here, I mean by the coronavirus. Okay, so from I remember the coronavirus was here, then you can see that some people are willing to reap their benefits and get out of the market. But there is more, let's say, traders who are interested to buy Ethereum at these levels here, but never buy without seeing some, let's say, the bullish pattern and the reversal patterns who confirmed or be confirmed by the charts and by majority of traders. Then you can take your positions without hesitation. So guys, this is it. I'm not talking about levels. I'm not talking about where the market is going, because I don't know, but I'm telling you this is the way to trade. And if you want, for example, let's say where the Ethereum can go in the next mounts, or maybe, let's say, maybe 2 mounts. So you can have, this is the 1.61 at 653, then the $1,000. Okay, so this is it. I think if we have the things done this way, we can have this lever. So remember to be always a buyer when you see some reversal candles at these levels here. And I think you can have a probability to make money trading this kind of algorithmic levels. But just remember, guys, do never buy without seeing some reversal pattern, or at least if you want to buy with the early long, you should set your stops and never go full of your capital. For example, you have $1,000, okay, or $2,000, and you buy here $2,000, and then you can wait. No, never do that. If you have obsession to buy at this level, just buy 10% of your balance, then another 20%, then another 50%. Okay, so you can have an average of a lower price, and trust me, the minimum price you can buy, the higher probability to make money you can have. Okay, so guys, this is it. Thank you very much for listening to this session. Don't forget to subscribe to my channel and also share the videos everywhere. Join me on Twitter. I will be so thankful, and appreciate your time. Appreciate if you're still listening till the end of this session. So have a good day. See you later.